Bismillahirrahmanirrahim. Subject is principle of auditing. In today's lecture is on watching. This is third lecture on watching. Teaching agenda for today lecture is watching of investment, watching of payment, watching of cash purchases, watching of creditors, watching of investments. This is investment. The company invested surplus cash in the shares or bond or money market securities or any government securities in order to earn some profit or to maintain its value. So these all investments are done through the broker. Broker send them a sold note. This sold note is basically a source document that the auditor will check. Auditor will check two things. One is commission paid to the broker and the amount received from the sale of investment. So these two things are critical for the auditor in order to invest vouching of the investment, that the company investment is genuine or just is for vendor dressing of their financial statement. The second document that is useful for the auditor in conducting their audit is bank advice. A sale of investment has been affected through bank, then the bank advice should be examined to watch the amount received from the sale of investment. So banker sold note and the bank advice should be made. It should be the auditor have to cross check in order to confirm the amount received from investment. Third is profit or loss. It can be confirmed by the auditor that the loss or the profit on the sale of investment have been properly adjusted. The fourth thing that the auditor should not limit it to internal document available to him. He should check the value of investment, the proceeds from investments with the stock market quotation. If the investment was in share, then it should be checked with the stock market quotation on that specific date. If the asset in any money market securities, so the value of the money market security should be checked from any money market quotations. That will corroborate that the value of investment have been correctly recorded. Cum dividend and sold ex dividend are two terminologies used in investment. Cum dividend means that the dividend will be received by the buyer of the shares. Cum dividend, which means with dividend, is when a buyer of the security is entitled to receive the dividend that has been declared but not yet paid. So the investor, what the auditor would check in it, the auditor should check that the sale proceed from the investment is properly apportioned between capital receipts and revenue receipts. It should be properly apportioned and recorded accordingly. Ex-dividend, in this case, the dividend will be received by the seller. Seller will sell the shares to the buyer, but the right to get the dividend is retained by the seller. So ex-dividend is classification of trade shares when declared dividend belong to the seller rather than the buyer. A stock will be given ex-dividend status if a person has been confirmed by the company to receive the dividend payment. In this case, the auditor should confirm that the proceeds from the sale of the dividend is the dividend amount received by the company and then recorded subsequently in the book of records. Sometime dividend have been received by the company, but it is not recorded. It is misappropriated in midway somewhere. How ex-dividend or cum dividend can be explained with this? Let's suppose 30th June is a date given by the company that we are going to declare dividend. Any person who will appear in the registered till 30th June will receive a dividend. So if X is a person who registered his name before 30th June in the book of account and the company declare the dividend, but it is paid on somewhere mid of July. So the X person sells their shares somewhere after 30th June and before mid of July, but this share, in this case, the dividend will be received by X because his name is come in the registered book. So it is called X dividend. If in the same case, if X sold shares to the Y before 30th June and Y registered his name in the book of in the registered registered book with registrar shares, then the Y will be entitled to receive the dividend. It is called cum dividend. So the value of cum dividend will be bit higher because it includes embeddedly the value of the dividend. The value of the X dividend share will be adjusted to the amount of the dividend. Vouching of payment. Cash payment is a transaction in which the consumer give liquid or hard cash in order to get any goods or services from the seller. Mostly in small businesses, transactions, cash payment transactions are in retail store. Cash payment transactions are more frequently taking place, but in large organizations, cross check is the fashion, and the creditor are encouraged to pay in cross check. Terms used in vouching of payment, we will discuss one by one. Check should be crossed and clearly mention that account, P account only. So cross check should be encouraged in case of payment. Cash in hand should be checked properly and it should be matched with the cash book. Wages statement or sheet should be prepared. Or personal account should be checked. Appointment letter should be checked. And one surprise, the auditor should insist on biometric system and make it necessary that the labor should come personally and receive the wages. Voucher should be checked in collaboration with other document. Voucher should be pre-numbered and should be pre-printed so that nobody can pay without these voucher. Bank reconciliation is a statement. It should be made on monthly basis. Blank check should be kept in log by authorized person. Monthly account should be tallied and should be watched with their source document. Discount should be checked, its rate should be checked, it's inconsistent with the prevailing practices. Unusual discount should be deeply investigated. Payment should be properly authorized means the check should be signed by two signatories. There should be limit on payment. Let's suppose 100,000, above 100,000 payment should be properly approved from the CEO, and below should be made on at the discretion of the Director of Finance. So there should be limit in the authority as well. Cash purchases. In cash purchases, we will check these documents: cash physical collections, cash memos, cash bill, good inward book, payment order, original receipts from the PE. Proper authorization should be granted. Cash purchase is an important area where misappropriation of cash is made possible. As auditor should examine if proper authorization is for such purchases from appropriate authority. If the purchases amount is huge, then it should be approved from the board of directors. Situation of purchase. The auditor should also check the situation of the purchases. In case of emergency, cash purchases of good may be allowed. So the auditor should evaluate the situation under which the purchase is made to ascertain the emergence of such purchases. If the situation was not so much critical, then the auditor should check the purchases more deeply and get external confirmation from other party as well. Maybe the supplier or the supplier of the good is fake, and the internal employee of the company collude in order to make a fraud. Internal control system. There should be effective internal control system for cash purchases. Often the cash purchases include stationery items for the daily use. So the auditor should ensure that there is sufficient internal control system which will help in controlling manipulation of cash purchases. Cash memo. Cash memo is a source document. It should be seen that the goods purchased are actually received by the storekeeper. Cash memos can be compared with the entries in the good inward book. These books are retained by this storekeeper. Cash memo is a source document which is retained by the account section. So these should be tallied with the purchase inward book to verify actual good received or not. Cash purchases, discount facilities. Auditor check the discount facilities provided by supplier to ensure that only net amount of the deducting discount availed have been entered in the book. For example, the company is liable to pay 10,000 rupees and there is 500 discount. So the auditor should ensure that 9,500 have been paid and 500 is a discount. If in the book 10,000 paid to the supplier, then 500 discount is missing somewhere in between the process. So auditor should investigate about this 500 rupees. Net amount, auditor should see that only net amount, that is purchases minus trade discount, has been carried to the book of account. Vouching of creditors. Good purchase on credit are entered in a purchase book. The objective of vouching credit purchases is to see that the auditor's client means the company to whom the auditor is auditing, pays only for those goods which have been actually received in the business, and these goods are not misappropriated. The auditor should exercise great care and effectively check the purchase book and related ledger account and must be tally with each others. Purchases is receipts that is issued by the payee for the collection of money is to be maintained. The receipt must be compared with the cash book entry. For example, the creditor gave you a receipt that I have receipts 100,000 rupees, while in book there is 110,000 rupees have been paid. So these should be checked properly. It should be matched with the receipts provided by the external party or the creditors against the amount received. Invoice, auditor should check the amount due to creditors, that is against or liable, the creditor is liable to pay the amount with the account of the creditors, and good receipts with the invoices. So all these four documents should be tally. If there is any discrepancy, the auditor should investigate it deeply. The seller may issue duplicate vouchers. The auditor should see that only copy is paid. Duplicate copy may not be accepted at all. The duplicate copy of the invoice that is given by external party, that is creditor of the company, should not be accepted by the auditor. Vouching of creditor, cash receipts. Receipts are issued for a payment of cash. The auditor can accept receipt only duly signed by the seller and approved by the buyer. The vouching of such receipt is necessary for the accuracy of record. Purchase book. Entry in the good inward book or stock ledger should also be verified to see whether the good have been actually received or not. Statement of the sale. This is one of the method for external verification. Auditor asks for the seller, the person who are going to sell to the company, to provide a statement of sales. Amount paid and payable can be examined in this statement of sale. Vouching of entries with the statement of sale is essential because this is the document that have been generated by the supplier of the company. Vouching of creditor, supplier account. Sometimes payment made to the supplier are misappropriated, and to cover up the fraud, forged receipts might be produced to ensure that the PE have actually received the amount. The auditor should compare supplier account with the statement of the sales submitted by them. Missing vouchers. The auditor should request the management to sign the duplicate voucher if there is if any voucher is missing in the process. So in order to have a complete record of the company. Purpose of payment should be properly mentioned or should be properly ascertained to ascertain whether the payment made to the supplier relate to the business, not to any personal use. The auditor should examine original invoices to find out whether the goods were purchased for the business or for the personal use of any of the officer. If goods are purchased for the personal use, it should be seen that the payment is debited to the personal account only. Thank you.